I don't believe they're going to gift us the chance yet again to buy an asset down 90% and give us a 30 or 40x return every time we go back to the casino. I mean, it's hilarious, the opportunity they've given us. And if you've taken it, it's made enormous life-changing profit. That's my biggest fear, is the damn thing goes down 40% and we're all caught offside waiting for the last leg and we don't get it. That's a bigger fear. It's not, and this is why I don't want to be trapped out of the market either. A lot of people fear getting trapped in the market. My fear is being trapped out of the market. This is the largest wealth-generating machine humanity's ever been given.
In his latest interview, macroeconomic expert Raoul Pal discussed the potential end of the 4-year crypto cycle. Traditionally, this cycle involves 3 years of massive outperformance for crypto, followed by a brutal 1-year bear market. However, Raoul believes this predictable pattern may be coming to an end. Drawing on his extensive experience with market cycles, Raoul shares valuable lessons and successful strategies for navigating the rapidly evolving crypto landscape. He reflects on the past 15 years of crypto as a unique gift, suggesting that the days of buying crypto at 80 to 90% discounts might be over. According to Raoul, investors attempting to time the top of the crypto market will likely face significant losses. Stay tuned until the end of the video, where Raoul breaks down his personal strategy for navigating the market over the next 12 to 18 months. Before we dive into the interview, a quick reminder, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing and turning on post notifications. It's free and you can always change your mind later. But without further ado, let's jump into the discussion with Raoul Pal.
Everybody has PTSD because the last cycle was stunted. For whatever reason. It started earlier, more aggressive because of what happened. There was the 2020 shenanigans and then the FTX. It was more stunted. That's what my view is, and it caught many of us by surprise. Would I have done anything different? No, I wouldn't have sold a penny anyway. So it was not in my thesis. I have a long-term thesis. Jeff Bezos is the richest man in the world, not because he fucking traded his stock. It's because he didn't trade his stock, right? I know it's antithetical for most people, but it is really the way to get rich, is just do nothing. But we all live in the real world, and we want to cash in some lifestyle chips, and we want to, make sure that we feel like we've achieved something out of all of the hard work that we've put in. So my view is I'm just going to use time. Somewhere towards the end of this year, I'll take a third off. Then I don't give a shit. And then if we have a super cycle, I'll take another chunk off. But I don't know what to do with that money. I don't really need to do anything else. So let's just sit in cash and wait for a bear market and hope it happens. God forbid if it doesn't happen, but at least I'll get some exposure. This is why, if you can avoid trying to do too much, in 7 years' time, you will thank yourself for not having done it. I've done both. I've sold out in 2017. The other thing is, let's say your $1,000 is now worth $1 million, and you sell out and you nail the high, you're within 20% of the high, brilliant. Market collapses down 90%. You will not put your $1 million back in. You can't do it. Even though it's de-risked, nobody can do that. And so which case you will under-allocate compared to what you would have had. It's weird. The psychology of investing, particularly when this is a high-stakes game, we've all got lots of our net worth tied up in these bets. The psychology of investing is really hard. So I don't know. We also build out models in the macro investing tool, GMI, everything else, around the timing, because we need to do it for the asset management firm to a certain extent. But me personally, I'm trying not to fret that noise, but just give people the tools to understand it themselves. I don't think the perpetual money machine overcomes cyclicality. Liquidity in, liquidity out. I don't think you can avoid it. So it's such a dominant force that if the Fed have to, and the other central banks have to reduce liquidity at the end of the cycle, which they almost always do, it will hit the assets. Firstly, for most of the liquidity formula, it matters not about rate cuts. Cast your mind back, 1994, the bond market blew up. Similar, not less extreme, but it was very extreme at the time. Everyone thought we were going to get a recession in 95, 96. We didn't, we skirted it. And what happened was the Fed cut once or twice, 25 basis points, 50 basis points, and then didn't do anything until 1998 in the Asian crisis. The NASDAQ went up 170% in that period. You just need stability. You don't need, .com, we've got the same backdrop that, of AI and everything else. You don't need rate cuts. You need liquidity and you need stability. And even if liquidity stays the same, but you have stability, it gives people the ability to take risk. So I'm not worried about it. I don't think anybody knows how it plays out, but I know that Europe has to and will cut rates. The UK has to and will cut rates. China has to and will cut rates. And if they're not careful, the dollar's too strong. So the US has to do something about it. So the only answer is liquidity. And let's say by not doing something, they torch commercial real estate, which is going to happen anyway, right? It's a slow death or an instant death, whatever way. The answer is always more cowbell. So whatever happens, the answer will always be more liquidity, which is why this is the most lopsided, asymmetric, macro risk-taking environment in all history. Take it off the table. This is everyone's obsession with the death spiral. These people are not stupid. They know the game. You don't know the game they're playing. The game they're playing is, we will keep this fucking game going forever because we have all the tricks up our sleeve. And once you've figured out that quantitative easing is printing of money, we'll change the bank regulations. And once you realize that we can't put the commercial real estate in our bank, we'll create an SPV and put the bad loans into it. Once you realize that they have all of the cards, but one thing they're motivated by is they are politicians. They will not allow the debt spiral. I think it's hilarious because at one level, I think the SEC and the authorities and the financial system think, well, we're going to control most of these assets and we can use our usual channels so we can maintain our fee structure and our control. How I think of it is it's a Trojan horse, because before you know it, you buy Bitcoin, then you're seeing that Solana's going up more. You end up opening a Coinbase account. Before you know it, you're self-custodying your Solana and aping into WIF. That's the journey. We've seen them all do it. They'll start with a Bitcoin ETF. And before you know it, they've got a bag full of WIF in their phantom wallet, and their worlds will have changed. So I think of it as a Trojan horse. They think they've won control. I think they've actually lost control. I think it's very simple. The left is utterly terrified of Trump. And Trump made a move, and they could see it resonated. And they're like, well, the only way of equaling the playing field, what we can't do. Somebody said this, and it's a really important point. When Elizabeth Warren said we're going to build an anti-crypto army, they're going up against a group of 25 to 45-year-olds who are distributed across the internet, whose entire passion is this one thing that makes them get wealthier, and you're standing in their way, and these guys know how to use the internet and memes. Good fucking luck to try to stop that.
I go one step further. To get wealthier, no. For some, it's the only escape.
100% agree. 100% agree. So I think Trump caught that narrative because he happened to have those NFTs. I think Ryan Selkins and a few others kind of explained very clearly is like, there's 100 million Coinbase accounts, 10 million are active. It will go up to 40 million, in 2025, in the normal bull market. Those are voters, and you're going to tell them you're not going to allow them to have a chance to get ahead, as you say, or even escape any of this trap that we've all created. And I think they've gone, fuck.
And it's so funny, in the land of the free, you can't deny choice. And then you have Warren, who earns what, $280,000 a year, and she's got 70 million in her bank account, which is probably funded by brown envelopes, allegedly. I don't know. Like, how do you make 70 million in 10 years earning a salary? Question for you.
I mean, look,
possible.
The US political system stinks. I mean, the UK, for all of its flaws, and it is flawed, doesn't have this level of corporate corruption at the highest level. Europe doesn't have it. It has bureaucratic corruption. Different countries have different styles of corruption. The US kleptocracy between politicians and corporations is disgusting, and everybody knows it. And, RFK is going to try and run on this. They'll try and stamp him out, obviously. On a long-term basis, number go up. So I'm not fussed about that. The path is interesting. I think it's going to be defined by how BlackRock define Ethereum. Right? You and I have been in the space for too long. We know what Ethereum is to us. We know what it is. We know how it positions versus other smart contracts. We know the breadth and depth of the Ethereum ecosystem and how good it is. We know its failures. But here's a bunch of people coming into the space, call them RIAs, and they need a sales pitch. And they've been given, here's a cryptocurrency, it's Bitcoin. It's kind of your life raft, it's digital gold. Okay, they bought that. So BlackRock are not stupid. They have no interest in going to sell, oh, here's another cryptocurrency, which would fail. So I'm really interested in the narrative they craft. Because this I think has a potential to change the entire crypto space. That's how big this ETF is. And not necessarily from a flows perspective, I'm sure it'll be fine over time, but more from what is the narrative of the space. And my guess is we're going to build the world on we're going to tokenize the world. And Ethereum is the platform to do it. And if they sell that, and we know every single investment bank has been building teams internally for years and years. ETH now gets regulatory clarity. There's going to be a raft of product coming out of finance.
So there's macroeconomic expert Raoul Pal on why the gift of the crypto market may now be coming to an end. We hope you found his perspectives on the evolving crypto landscape and the potential end of the 4-year cycle both informative and thought-provoking. Raoul's extensive experience and strategic insights offer valuable guidance for anyone navigating the crypto market over the next 12 to 18 months. Remember, the days of waiting for massive dips to buy may be behind us, so staying informed and adaptable is more crucial than ever. If you enjoyed this content and want to see more finance-related videos, please consider subscribing to the channel and turning on post notifications. Your support helps continue bringing you high-quality content and is free to subscribe. Now guys, if you're watching this video, you're clearly interested in crypto. If you want to stay up to date with the latest in the crypto and Bitcoin world, don't forget to subscribe to our daily 5-minute crypto newsletter. It covers expert predictions, breaking news, and top on-chain analysis all in a nutshell. Click the first link in the description to join over 60,000 others in becoming a better crypto investor right now. Thanks for watching, and we'll see you all in the next video.